Welcome everyone, and thank you for joining GP Bullhound's Global Tech Market Update. I'm Jade Williams from GP Bullhound, and before I hand you over to today's host, Hugh Campbell, I will just run over a few points with you. We won't use the chat function today, but please feel free to drop your questions in the Q&A box during the webinar. We will also allow for some time at the end of the presentations to answer as many as we can. Today's webinar will take around 60 minutes, and we will share a link of the recording with you after the event. Just look out for the follow-up email over the next couple of days. You can also find more information on our upcoming online events, as well as recordings of previous ones at gpbullhound.com/events, or simply scan the QR code located in the left-hand corner of your screen to sign up to our news and ensure you don't miss out on any future events. If you're not following us on Twitter or LinkedIn yet, our social media handles are shown at the bottom right-hand corner of your screens. So to recap for those who have just joined, you can drop your questions in the Q&A box throughout the session, and you'll receive a link to the recording within the next few days. So with that, I'm delighted to hand over to Hugh Campbell, Managing Partner and Co-founder of GP Bullhound. Over to you, Hugh.
Thanks, Jade. Hi, everyone. Great to see you. Thanks for joining. If any of us were in any doubt that tech was flavor of the month before the pandemic, I don't think we should have worried, as it certainly is now. And we have a fantastic lineup today. John Cantwell has joined us from San Francisco. He's our SaaS guru. He'll give you an update on the software industry. Johan is with us from Sweden to talk public markets. And my colleague Elsa is dialing in super late from Hong Kong to give us an Asian perspective on the technology sector today. So lots to cover. As Jade said, do send us your questions as we go through. John, Elsa, the rest of us, we're all on hand and happy to answer them as we go along. But first, I'm going to have a chat with my great friend and co-founder, Per Roman. Per, as many of you know, apart from being a co-founder, also runs our investment business day to day. Hi, Per.
Hey.
How are you doing? So tell me, where are you today?
I am in Spain today.
Okay.
Yeah.
So the land of the harsh lockdown, and I know you also spent the summer in Sweden, which is perhaps a totally different approach to this pandemic.
Yeah.
So let's get going. I mean, how do you think these large economies are doing as we try to manage COVID-19?
We have some quite fresh data that's come out of that this week, Hugh, and I think it's really polarized. I mean, we see a great divide between the north and south of Europe, with Southern European countries, for instance, where I stand right now, really faring pretty badly. I mean, economy declining 20% or more this year, which is, you know, creating very significant unemployment, and I think is leading these countries into kind of recessionary zones, if you will. Whereas I would say in the Nordics and also in Germany, things are picking up really fast. I mean, data out of Germany yesterday was a lot more positive than people were expecting. You know, the high streets are back open, restaurants are full again, and it was more of a blip, and society moves on, and the economy for sure. Of course, Sweden, which is where I originate from, took a bit of a gamble. The gamble seemed to have worked out really well. I think they are very close to herd immunity, and the economy didn't really take a hit at all. And you get the advantage of coming out being more competitive than those around you. And then I would say kind of the middle of Europe, France, UK, probably somewhere in the middle between those ends.
No, it's really interesting with offices all over the world. We've been opening offices and shutting offices and having to respond to the volatility in day-to-day business. It's been a fascinating 6 months. But I mean, we speculated a bit together, if you remember, back in May. We saw the stock markets were at pretty high levels even then. I don't think we felt it was sustained. I think we probably even speculated we might see a summer sell-off, and and look where we are. I mean, tech has probably never had such a strong week. Do you think we're in 99 territory at all?
Well, I mean, I have to say it's been surprising to see not just the resilience of the tech side of the stock market, but the massive flow of capital from other asset classes and other parts of the equity space into our industry. And I mean, we've been waiting 20 years for this to happen. So I think largely we should be delighted that, you know, our most beloved companies are now getting the attention they have deserved for a very long time. That's the positive side of this. And I absolutely admit, I think it's a more positive outcome than I was forecasting. But I'm also concerned. I mean, not valuations in general, but valuations in certain areas of tech, SaaS software in particular, and kind of the news stories in particular are quite astronomical. I saw some data early this morning ahead of this call that does indicate, however, that we're still far off the multiples of 99. I mean, we're about half of those multiples. And of course, those were not profitable companies largely back then. And now many of these businesses are absolute cash cows. So I think the real story is not a bubble in tech. I think the real story is that there are bubbles within tech. I think many of these earlier, younger companies are all by growing super fast and are having good tailwind from what has been going on, may be quite a bit over-egged. But when you look at the more kind of staple names, the Microsoft, Adobe's, Salesforce, etc., NVIDIA, I feel a lot more comfortable.
I was scratching my head on Monday as we looked forward to this week, not of course just for the webinar, but the number of IPOs expected. I mean, I'm from Manchester, so seeing the Hut IPO was an absolutely fantastic event for the whole Manchester tech scene. They had a lovely pop up to about 6 billion in valuation. You and I are both investors in the fund in Unity, which looks like it could be repriced. And then we had a bonanza with Snowflake. What was your perspective on that?
Well, I think first of all, we're going to say hats off to investment bankers around the world who clearly timed this IPO window incredibly well. And it's a profession that doesn't very often get compliments, but at least they get one from me now. And I think this shows that there is tremendous pent-up demand for news stories in our space. And I think it's somewhat different. I mean, I think what we see with the Hut in UK, I think shows that the UK stock market really lacks enough, you know, internet and software names. You know, I think we all are sad to see, you know, when ARM left into the hands of SoftBank and now into the hands of NVIDIA. And I think we need much more of the Huts to go to the stock market to create a viable long-term environment. And I think in US, I mean, this is a bonanza at the moment. I mean, I'm definitely fearful of this Robin Hood factor. You know, I'm definitely getting stock tips now from taxi drivers, etc. And of course, when you do get those stock picks and you then ask the stock picker, what does the company do? And they say, well, it's a company that just goes up and up. That reminds me a little bit of 99, because I think companies do more than just go up as a stock, right?
No, I remember some of those days as well. But of course, it isn't just about public tech. I mean, we've also seen some massive M&A deals. And the one that really tickled my fancy, perhaps the most peculiar deal we may see this year, was, of course, Oracle's acquisition, partnership, investment, I'm not sure what you'd call it, in TikTok. And they seem like two very strange bedfellows. What do you think about those two?
Well, I mean, first of all, we're going to remember, you know, the biggest problem here is that Facebook, the most obvious owner, can't buy it because of the, you know, headwind they are facing and kind of the feeling that they're too monopolized when it comes to social networking in general. And that kind of left an odd field of left field buyers. You know, it's equally odd to think about Microsoft as an owner of a youth service largely. I think what Oracle, and I think this is very much hands-on work by Larry himself, is just a brilliant set of chess moves. I mean, he's built up a very strong relationship with the US government, where of course this whistle was blown in the first place. and he now got paid back in spades for using politics as a weapon to build his business rather than taking a view. But what one also shouldn't forget is that Larry personally, in the last 30 years, have been a huge fan of Asia and has done so many good things for and in Asia, personally, with his money, through charity and through his business. And these are regions of trust. So I think that played a role too. But in the end, Hugh, without doubt, what this allowed ByteDance and the Chinese government to do was to not sell the company. I mean, this is not a sale of TikTok. It's a movement of the data onto Oracle's cloud servers, which I think feels safe enough for the US government. So in a way, I think everybody's a winner here, particularly the Oracle share owners, but also the ByteDance share owners.
That's great. And let's dive into some themes that perhaps you've been thinking a little bit about. And I've got a couple more questions before perhaps I hand over to Johan. But I mean, we've been actively making investments through the pandemic, mostly in businesses and entrepreneurs we've already met. I think we're probably yet to make our first investment without meeting the team. But as you think about the CEOs that you've met over the years, I mean, what characteristics are really standing out now as we try to recover from what was really a huge blow from nowhere?
Decisiveness and resilience. I mean, everybody has faced a storm of data, a storm of opinions from family, board members, all sorts of people, right? And I think we've seen several of our portfolio company CEOs, they've listened to that, but they've listened briefly, then they have made up their own mind and they've executed accordingly. I mean, I think those that are real winners out of this have been those that have gone into execution fast, whether that is using tailwind, as many have had, and maybe using the tailwind to raise additional capital, launch additional products, get on new software or cloud networks, or for those that have faced headwind to take rapid job cuts, to reshuffle and focus on core. And I think there are so many great stories out of that in the last 4 months. I mean, it really makes me believe in humanity, to be honest.
So a real focus on entrepreneurs with resilience and decisiveness.
Yeah. You know, there is a point where you need to stop listening and just start doing.
Absolutely. And then as you think about 2021, where are you going to take the investment business in terms of trends that you're getting excited about?
We're very excited about online learning, online education. We think the classroom has already changed permanently. We think the whole field of health and medical has also changed permanently. So what people define as telehealth and health tech, I think as leaps and bounds moved forward because of this. Both of these industries have always benefited from very large market opportunity, but has been challenged by a lot of red tape, a lot of regulation, a lot of traditional thinking within it. I think that has been broken apart in a very positive way. And the last space I want to mention that is so evergreen is that of entertainment, whether this is interactive entertainment in the forms of mobile games or services or social networks or games that become social networks. I mean, it just seems endless how much services and time and content that we as a species are willing to consume at work, while running, at home, with friends, without friends, on airplanes, in cars. And I think with 5G coming down the pipe so that we can truly have access to this everywhere, we're going to access it all the time from everywhere.
Yeah, no, I just was reflecting with my wife how many streaming services we now have in the household. I remember a time when we thought it would be only one, and I seem to be paying for Disney Plus and paying for Spotify and paying for Netflix and Sky. I mean, it's an endless amount. And I know for sure that if I turned any of them off, one of the members of my household would be very sad.
Yeah, I mean, that's why you and I still have to do webinars.
So maybe last question, which is really about pricing discipline. So of course, there are some great opportunities, but you're not alone in trying to hunt these out. From what I can remember, there's never been so much private equity capital and strategic capital available than there is today, particularly given this shift towards technology from other asset classes. So when you think about valuation, how do you remain disciplined? Because of course that's, a very tricky thing to do with a falling knife.
It is true. I think we have two benefits. I think pricing still in the private markets in all the stages are a lot more attractive than in the public markets. I also think there is a real European discount that we want to take advantage of. This is of course true to any player in the market, but I really love that discount. But then in the end, I think the only way to manage price discipline is by building a rapport with the founders, so that the reason that you get onto the cap table is not that you're the highest bidder, but that you maybe are the most value-adding party coming on board. And I think we're going to see real polarization around that in Europe in the next 5 months.
No, that's great. Well, listen, thanks, Per. As always, great fun to chat to you. And I'm sure we will have lots of questions for you at the end of the session if you can hold on the line. Now it's over to Johan, who can perhaps develop more specifically some of the public market themes which we've touched on. Johan, over to you.
Thanks, Hugh. Back in early March, most of us had a pretty dark scenario in mind when it comes to how the stock market would perform in 2020. However, if you had been asleep during the months of February and March, you would think that the market was closer to the tech boom of '99 than the financial crisis of '08. And the largest shock in the stock market of this year is maybe not COVID-19. The biggest shock is maybe the return of the small investors who are trading via apps such as Robinhood like never before. Another interesting observation is, of course, that tech is continuing to overperform. Since the beginning of 2019, the main S&P 500 index here in blue is up 34%, but the tech index is up 84%. So that's an overperformance of 50 percentage points, and 30 percentage points of that is attributed to 2020. And looking at the next slide, we see some pros and cons when we ask ourselves if the market is overvalued here. Multiples are the highest since '99, mainly driven by low interest rates. The US 10-year rate is now at 1% and is likely to stay there for quite a time, given the new fiscal policy in the US. Also looking at large tech companies such as Microsoft, Apple, Amazon, the financial risk is extremely low, with strong balance sheets and cash flows. You can even argue that it's lower risk to invest in these companies than in many countries. The global IT spend is also growing 2 to 5% above GDP, and that includes legacy hardware such as servers and desktops. So there are a lot of room to grow for the large software companies. Also, they are taking revenues from other sectors on top of that. So Uber, for example, is taking money from the taxi industry and Airbnb from the hotel industry. On the next slide, we have put together a list of the highest valued tech companies. And Zoom is still the brightest shining star. The multiples after this last astonished report, when they grow 355% year over year, is that the valuation now, if we look at the estimates for the next 12 months, is 40 times earnings. Also, the e-commerce platforms such as Shopify and BigCommerce that newly IPO'd are also valued above 30 times revenue. And you can also see in the beginning of that list a lot of cybersecurity companies such as Okta, CrowdStrike, and Zscaler. Many of these have fantastic products, but compared to the large software companies such as Microsoft, Adobe, and Salesforce, most of them don't make a profit on the bottom line. There's a risk that the larger tech companies will go after the future profits in the industries that these companies are covering. Some will, however, be really successful, but some of them needs to expand their markets to be able to justify these valuation multiples. A good example is Amazon. That was always expensive if you looked at the potential profits to be captured in selling books online. But Amazon branched out and managed to take profits both from cloud infrastructure and marketplaces. So with that, I'm handing over to our software sector head and partner, Jonathan Campbell.
Thank you, and hi everyone. Happy to be joining from San Francisco. We're seeing quite a shift in the software landscape and really an acceleration over the last several months, and we're quite excited about it, in terms of investing in these types of companies, working with them, advising them on interesting acquisitions and capital raises. And we have a few data points to kind of walk through here as we reflect on what's happening. We track about 75 public software companies in what we call a GP Bullhound SaaS index, and these are companies in US and Europe and Asia. It's probably 60% US, 30% Europe, and 10% Asia if you break it down. But as you can see, there's been a nice run up in the public comps, and not as high as the few selected companies we just showed, like Zoom and et cetera, in terms of an average. But currently, as of just a couple of days ago, the index as a whole is trading at over 16 times trailing revenue and over 13 times forward revenue. So that's about 70% above the 5-year average, and you can argue we've been in a pretty good 5-year time period for software companies looking back. But really, trading at pretty high levels, and you see the dip back in kind of late March, where the initial COVID reaction came, and the index did trade down below the average, not too much below, but slightly below, and then has had a nice run up with a few kind of starts and stops, as you see in the lines there. And we think this will continue. It's quite interesting to see companies like Snowflake go public, and a number of companies like Asana and others that are kind of geared up. I'd say this is driven primarily from enterprise software companies and not necessarily consumer. So as we go through some additional slides here, on the next one, we have taken a look more closely at private company deals and M&A deals on the left, private financings on the right. We see still good trends in activity in deals. I think deals are taking a bit longer from kind of the LOI stage to closing than in the past, due to less in-person meetings and those types of dynamics. But there's certainly still robust M&A activity that we're seeing in the market, with both large and small deals. But we really see in software a bifurcation of kind of flight to quality. So good companies getting good valuations. I think below average companies are not quite getting the interest that we're seeing across the board. And then just talking on the right, some of the private financings, pretty interesting one on the top there. So Sprinkler is a business out of New York, focused on social analytics. They had a large traditional buyout firm in Hellman & Friedman come in and actually buy a minority stake of the business. It was about just under $3 billion valuation about a week ago, and they've invested to more of a growth investment. So we're seeing more growth investments than, say, traditional PE turnaround situations, which is a reflection on the market. And then finally, we've reflected on some trends as well, just more qualitative trends. We do a quarterly software report that a lot of you have probably seen. Usually, they send it out a couple of weeks after the quarter ends. So our Q3 report is in progress, and we typically highlight some trends. We've crystallized about 5 of them here on the current state of kind of software with COVID-19 and just the year in general. And these are the 5 biggest things we're seeing, kind of across the board. The first one is in regards to consumer spending, and going off of the sprinkler deal I just mentioned, there's been an increase in a real-time need for customer intelligence and to have that from online, methods such as social media and mobile and other online, use cases. So you're seeing a lot of kind of capital investment around AI-powered consumer insights, analytics, ways to predict consumer behaviors, and that was a big thesis around the sprinkler investment, and a trend we see going on, continued. And there's some good companies in that space, both in the U.S. and in Europe. Number 2, more along the lines of inventory and supply chain management. So more software there, being used to have seamless distribution and good customer experiences. We're seeing, a lot of online commerce and, just shipping and managing of inventory across the world. So more use for software in that space, less sexy area, just, being in supply chain, but certainly, much needed in this time. And then number 3, payment processing being in high demand, thinking of companies like, Stripe and Shopify, who both are at different ends of the ecosystem there. But as more companies are, using digitally focused consumer checkouts and experiences for customer retention, repeat purchases, just the ease of that is highly important. Number 4, I think Per touched on this a bit, the learning management system space, both, for individuals such as, schools all the way from K through, say, higher education and university, and then also at the corporate level, as new employees get onboarded and, get trained and kind of, increasing skills as they move up in the organization. A big focus on, online corporate learning management systems, and having those be fully in sync across an organization has been kind of an interesting trend to watch as well. Something started, probably 10, 12 years ago, and then had more of a lull in the technology, but has come back over the last, 12 months as being a pretty important area. I think there's a ton of investment in that space right now. And then finally, this is maybe where Snowflake would come in and other, kind of cloud data businesses. A demand for cloud-based data warehousing has certainly increased. I think there's some relation to the security space here as well, as data needs to be secure and kind of fight against any cyber issues as more data is in the cloud, and there's more chances for hacks and things of that nature. So we're seeing a lot of, again, analytics around how data is housed, and also, the difference between structured and unstructured data in this type of environment. So an interesting trend to also, follow over the next several quarters. So those are kind of the 5 biggest trends, and then also previously, some reflections on both the public software markets and the private markets from a global standpoint, but a bit of a U.S. bent, I would say. And I'll pass it over now. I'm happy to take questions, but we'll pass it over now for an Asia market update to Hugh and Elsa.
Great, thanks, John. Hi, Elsa. It's getting late in Hong Kong now, so thanks very much for joining. And I hope those of you that are on the call have read Elsa's recent Asia tech report. I think you released that last week, if I'm right.
That's correct.
So let's jump into geopolitics. Your region seems to be awash with that, whether it's China and the US and China and India. So tell us a little bit about the tech sentiment out there right now.
Thanks, Hugh. Hi, everyone. I think it's always the first topic that comes up nowadays in conversations. Everybody is very focused on all the deals, the big news, the geopolitical tensions in this region, and also between China and the US and all the different countries. I think in general, the tech sector in a way is a little bit untouched. I think in general, there are just so many things going on in terms of strategy, longer term planning, business development, and everything. So it is not easily changed just by one or two events. So for instance, if previously you are getting into the US market, then currently you probably are thinking about how to mitigate the potential risks and how to better or find a better route or a better partner instead of cutting that out completely. So I think the sentiment in terms of investing into US and Europe, we still, of course, the deals usually take about a few months to a year to come to fruition. So we probably are yet to see the actual outcome. But currently, based on the Q2 data and the intelligence that we have collected around the investors, I think people are still quite cautiously positive. They are not too worried that things will be completely halt, or everything will come to a complete stop, or everything will be ring-fenced, for instance. So as you can see here,
it's clear, Elsa, that less money for certainly China is flowing into the US. So which areas of the world are benefiting from that? Because the China investment in technology is not slowing down.
Yeah. As you can see on this page, there's obviously some decline or slight decline in overall volume into Europe and the US. And on the next page, you can actually see the Asian money flow into Europe and the US. Actually, not that drastically different. But if you go on to the China slide, actually, the next one, you can see quite a different story. You can see that the US, especially the deal value, has dropped quite a lot since the end of 2019. On the contrary, a lot of money has been flowing into Europe and APAC. Europe, the deal sizes might be small, but the number of deals have been growing quite steadily since end of last year. And APAC, quite obviously, there's always a big trend for because it's very close to China. So I think in terms of China going overseas, you definitely see a lot more talking about Europe, and of course Asia continue to be the destination.
And has this tension between China and the US resulted in a stronger local stock market when it comes to tech? More
yeah, I think, well, of course, China is also part of the global market. So as Johan was mentioning, how the stock market has been rallying around the world, China hasn't really escaped that. If you go on to the next slide, we can see that, sorry, there is an IPO slide. Sorry, just quickly see. If you go on to, yes. So as you can see, the volume of new IPOs has been quite steady. A lot of those deals are previously filed, so we still see quite a lot of US IPOs, but on the at the same time, you do see a lot more companies either coming back to China or to mainland China or to Hong Kong for secondary listing, or in the process of doing that. And if you talk to new listing companies that are planning on a new listing, I think both small and bigger tech companies are more and more considering a domestic, either mainland China or Hong Kong listing. So I think up to this year, Hong Kong has already received more than 300 something filing, and probably more in the coming months.
Great. And I guess with this big switch towards tech globally, I mean, we've always spoken, at least in the West, about BAT, so Baidu, Alibaba, and Tencent. But do you see post the pandemic some new kids on the block, some new large Chinese tech companies that will be making acquisitions overseas?
Yeah, actually, even before the pandemic, when we talk about BAT, it's actually really just T, mainly T and A sometimes. So if you read our previous quarterly reports, it's usually Tencent that's been dominating its own realm of the verticals in digital media, and Alibaba from time to time will jump out to do some other deals. We do see ByteDance very active nowadays. They are, of course, as you mentioned, to pair. They have their paying to live with, but at the same time, they are super active in looking at new opportunities and building out business. We also see other leaders in different verticals. So in last quarter, in Q2, we actually see Credit Ease, for instance, one of the consumer finance companies in China. They have made several large investments into Israel in cybersecurity and in software. So these are some of, and of course, Ctrip, the leader in online travel, continue to make acquisitions overseas. So we will continue to see those vertical leaders making very strategic moves.
Great, and let's just jump into some sector trends in your region, Elsa, for a second. I mean, the Asian market has always been pioneering in online shopping, for example, and that whole sector, of course, is getting a tremendous boost through the pandemic. So what e-tailing trends are you seeing that over there that we might soon pick up, you know, over in the West?
Yeah, so Asia, of course, the 2C business is always very mature and growing very fast. I think currently a lot of the money within the region is going to two directions. One is actually to more of the infrastructure level, so what we call software level. So previously the software part was more or less overlooked, but now people realize how, especially during the pandemic, how a good online infrastructure would be able to support and better grow the business when the business is basically taking off like rocket. So a lot of money is now put into building that infrastructure, either through investments or acquisitions or buying up new business. So there's actually a very good pickup in companies' willingness to pay for software for the first time in this region, and it would represent a good opportunity for the software and even the newer SaaS type companies here in the region. As you can see in some of the top sectors, software has been the top sector in this region, both for domestic and overseas investors. So the other direction, of course, is continue to go dig deep offline. There are a lot of investments into the so-called new retail brands. So these are the brands that are not built upon traditional model. They are built online. So they are built through influencer communities, or they spend a lot of money doing online marketing. So these are the new consumer brands that are attracting the new generation, and that is also attracting a lot of interest.
Great, and a couple more questions from me, Elsa, before we take some questions from the floor. So much has been written about and said regarding China's global lead in artificial intelligence. So it'd be very interesting to get your perspective on that. I know you have a strong relationship with the SenseTime team, and it'd be great to get your perspective.
Yeah, so recently, because of Dr. Kai-Fu Li's comment on some training data using facial recognition data early on for a leading AI company in China, it sparked a lot of discussion. I think that's the nature of the industry history in China. So a lot of the growth, a lot of the expansion was probably achieved at the cost of a certain type of way of doing things in terms of using data, in terms of building the model and finding the application use case. Because a lot of the AI companies here rely on government contract, for instance, or public security use. But that is changing quite rapidly. I think they are, on one hand, doing a lot more to make sure that they handle the data and use the data properly. I think that's also combined with the global pressure. What we talked about, the geopolitical pressure. If they want to be global, then they need to be compliant. And on the other end, they also have been developing a lot of non-government use case. And I think so far, companies like SenseTime have been quite successfully doing that. I think they have about 25 different verticals that they can use the technology. And a lot of the AI companies are going very deep into offline, into industries. So one of the deals that was done last quarter was by an AI company called Globotics. They provide AI software and technology for wind farms when they need to do inspections. So a lot of these are coming up. So I think they will welcome, or people will welcome, the next stage of China's AI.
That's great, Elsa. Many thanks. Very interesting insights from Asia. And do stay on. Maybe I could ask my colleagues to jump back on the Zoom, or at least come onto video and come off mute, because we have a few interesting questions. We have 10 minutes left, so we'll see how many of these we can cover. So, Per, the first one is for you. Are you on?
Yep.
Great. So this says, do you think there will be a thawing of US-China relations if Biden wins the election? So maybe starting with you, Per, and then we can ask Elsa the same question.
Well, yeah, things can only get better from here.
Great. And Elsa, what's your perspective?
I think definitely in the near term, not too sure about mid or longer term. I think people here are a little bit more pessimistic.
Okay, great. And then, John, maybe you could talk for a second a bit about the rest of the IPOs, software IPOs for this year. What do you see? There's a big funnel coming down the pipe. What should we expect? Should we expect more snowflakes at 30 times revenues, or a more disciplined approach?
Yeah, I think we do expect it to continue. I mean, we talked about 1999 earlier. I think there's a big relation in terms of these software IPOs being kind of top of mind to everybody. Per also mentioned kind of the Robinhood effect, which is driving things. So yeah, I think with the ones coming up, JFrog is one, Asana is one, Sumo Logic is another. I think we're all expecting those to, pop pretty good and continue to kind of carry the software index.
Great. And one for you, Per. You mentioned when we were talking about the long-standing discount that exists for European technology businesses versus the US. There's a question here asking for a little bit of context of the history for that. I mean, of course, if you're a European tech founder, that seems desperately unfair.
Well, I think it is desperately unfair. I mean, there's a great cultural difference between US and Europe when it comes to risk and when it comes to the value of significant upside. And in the end, the venture and growth communities in both these continents are really beholden to the underlying pension funds and sovereign funds and the largest pools of capital. And in Europe, there is still a very cautious attitude to venture due to the internet bubble bursting in 2000. So that what happened 20 years ago in Europe is still fresh in memory. Whereas I think US by culture tends to move on and move forward much quicker and sheds their skin quicker. And of course, if you're in the game of innovation and in the game of fast growth and taking risk, that latter style is more beneficial. I then also think it runs all the way down to the investment style in our own communities on GP level, where I think it is very common in US, particularly in the West Coast, particularly in the Valley, to take real moonshot bets, to put in very large amounts of money into a great idea and see if you can make it stick. Whereas I think the European model is still find the business that works, put in money, support it a few years on the way and be happy with a moderate return. I think it's always gradually changing for the better. I think it's changed a lot. I mean, if you look at the type of investments that we do, you know, Slack, Spotify, Klarna, Revolut, DuckDuckGo, I mean, they're super high risk, high profile investments. I think we're a very American style investor and we'll see others follow that as well.
Great, thank you. So a number of you have touched on online learning, or I guess EdTech as a theme. I know it cropped up in yours, John. Johan, you mentioned it as well. Maybe we can start with you, Elsa, on a question around language learning apps and what future you see for those. And then we can perhaps turn to you, Per, regarding Busuu. So Elsa first.
Definitely, there is, there has been a lot of interest, but even after the pandemic, there's even more. Language learning is always the basis of all the online education. There's continuing very high demand. So I think language learning, especially those that would combine innovative learning methods. So instead of just traditional one-on-one tutoring, for instance, if you do more gamification, or depending on who the target audience is, but if you can combine more into that language learning and also be more supportive to school curriculum, especially when now the school system is a little bit weak online. So if you can have the online learning platform that can complement very well with the school curriculum, I think that would definitely be a blast.
Yeah, and I mean, I would just add to that I think we also see a deeper trend where, you know, we consumers don't just use our mobile for light entertainment like a Netflix or a gaming experience, but also for deeper, more intellectual experiences. We saw that maybe first with Calm and Headweb in the meditation space. I think that's done tremendously well for the world. And I think we're seeing these more deep learning experiences follow that. I think languages are brilliantly positioned to be learned through a mobile experience, particularly if it's a mobile social experience. And it's going to be really exciting to see how that plays out.
Thank you. We're getting some good questions in. Here's a tough one, Johan, for you. So as you look across the public tech landscape, there's a question here around GDPR and privacy, I guess, underpinning that. You know, which companies or which sectors do you see most at risk if the US takes a more European approach with respect to GDPR and privacy? Do you have some concerns out there?
Yeah, we can see that Apple is enforcing some more privacy when it comes to ads, that you can't target by group. So that makes it much harder for the depending on ad spend in a mobile experience. So clearly it's for the ad depending companies, these things will make it more tricky. I think you still can target ads pretty good even if you don't know everything about the person. So for example, DuckDuckGo that our private fund has invested in, they don't know anything about you, but they know what you search for and they show you relevant ads for that.
Great. So businesses that are exposed to the advertising sector online. Very good,
Yeah.
thanks. Then I got a couple of questions before we round off, I think. So Elsa, you touched on Tencent briefly as the most active of the BAT, at least in M&A outside of China. What's your sense on what they're looking for today? Is it more computer games, or are they broadening their remit?
Well, they have always been quite broad and quite open-minded when it comes to overseas investment. But I think this year, up till now, and as far as I know, for the upcoming months, they will be quite focused on gaming or digital entertainment in the content, social gaming side of the business in general. I think they just did the Voodoo deal, which is not in our Q2 report, but will be covered in the Q3 report. But they will continue to do things like that. I think they are so gaming and including the content side. So for instance, music and other side. So I think they will focus on that.
Okay, great. And then John, there's a question here around Central and Eastern Europe and their heritage in the software space. Are you starting to see more and more businesses come out of that region, the Baltics, Central and Eastern Europe?
Yeah, we're seeing some. I mean, still not as much as Western Europe or the US. But I think it's an area for an investment. We've come across a lot of companies more in the 5 to 10 million range, starting to grow there and expanding. I think partly there's a challenge of customer diversification and getting some geo expansion, but it's a good area for tech development for sure, which is uplifting a lot of kind of startup companies that we're coming across. But still not a ton of companies of great scale yet.
And what about you, Per? Are you starting to shift your team? I know you've made investments in Germany now. Are you starting to look further east or not?
I would say absolutely yes. I mean, I think there's so much software engineering talent in the East that is a real opportunity. I think they are maybe a decade behind when it comes to the sales expertise and the venture capital expertise. So I think at this stage, we would probably do investments only quite late stage in Eastern Europe so that those pieces are already in place and proven.
Very good. And now last quick fire question for all of the panelists. So you only need a one-word answer to this. So NASDAQ, higher or lower by the 31st of December? And we'll start with Johan.
I would say lower.
Per?
Lower.
John? I can see you
Higher.
smiling. And Elsa?
Higher.
Okay, so that's too low or too high. That's no good for our audience. Oh my God.
Great. Then we're going to be right no matter what.
So listen, many thanks to all our speakers and of course the GP Bullhound marketing team for pulling this all together. I think we've had some really positive messages today, and certainly here at GP Bullhound, we're starting to move from a defensive and perhaps a cautious mindset over the last few months, quite natural, I think, to a much more offensive way of thinking. I think it's very much time to get on with our lives and get on with business. So the next event you will hear from us is Investor All Stars. You're all welcome to join the live session. That's on the 1st of October. You can see that up here. We published the awards shortlist on Monday. It covers awards for investors, for entrepreneurs, and for companies, of course. So get voting. We very much hope to see you then. Thanks for joining, and goodbye.